Hello traders, good day to you all. Today is the 1st of August 2014 and this is the daily market review for the current market status. My name is Christopher Glen, and as we can see today we've got a bank holiday in Switzerland. We do expect to see a bit of liquidity on behalf of the euro, but not that much. We had a whole roller coaster 2 days ago and even yesterday because of the announcement regarding the unemployment claims in the United States. Basically we had no change over here, and we will see the difference that we received on the dollar index chart. But on behalf of the Canadian dollar, we received a good GDP report. Today, specifically, as I said, we've got bank holiday in Switzerland, but still we do expect to see a bit of liquidity on behalf of the European session. And after that, when the US market will begin to operate, then we'll receive the indication regarding the non-farm payroll for this month. Exactly for, actually, it's for the past month indication and unemployment rate, again, in the United States. We know that we're approaching a very special situation, a very different situation in the United States on behalf of the dollar because of what's going on right now with the extension program. We know that Yellen told us that they're going to lower the amount of support to the market, and therefore it's expected to raise the interest rate in the United States, and it seems like the economy itself is doing way better. We do expect to see a stronger dollar in the market, and I've been talking about this strength for the past month or so, guiding you through the chart of the dollar index, and we will again analyze the dollar index again for next week as well. So we've got a very important announcement today regarding the non-farm payroll and the unemployment rate in the United States, and after that we will have the ISM manufacturing PMI. Let's go to the charts. So I've been talking about the dollar versus South African rand. I told you that I've entered a position over here, and since then we did receive a very clean 5 waves of an uptrend movement. Let's go to a higher trade, higher rate. Okay, so we can see that we've got the first 1 and 2 climbing higher, and then we've got the first 1, 2, 3, and right now we're forming the 4th, and we do expect to see the 5th climbing up, and then a bit of a downtrend movement. So basically I'm not expecting the non-farm payroll announcement to produce a lot of liquidity. I'm expecting it to deliver a bit of confusion. I'm expecting it to ruin the security that we've got on behalf of the dollar at the moment. But let's look at the dollar index. Dollar index, as you can see, is fluctuating around the same levels for the past 2 days. I've closed the position already because I saw that this area is a very difficult area to cross, and I was expecting the dollar to bounce backward and forward. Just looking at this structure, we can see very nicely that we're forming a triangle over here. And let's talk about the meaning of a triangle. Once we can see a triangle, it means that we've got a lot of confusion in the market. The amount of buyers is equivalent to the amount of sellers. Therefore, the price is climbing higher, falling down, climbing higher, falling down, and concentrating into a very narrowed area. The aspect at the moment is to bounce backward and forward, and it usually happens at the end of the 5th wave, meaning that over here we should see a completion of the uptrend and we should see some sort of downtrend movement. Therefore, my assumption is that at the moment we've got a potential to see weaker dollar in the markets as an expression of the non-farm payroll. I do expect the non-farm payroll to deliver a bit of weakness on behalf of the dollar. Now, as I said, I do expect the dollar to gain strength eventually, but for today I see it getting weaker. That is my assessment regarding this structure specifically. Again, we can see that we've received a first 1 and 2, just like in front of the South African rand, and again a third wave of an uptrend movement. Let's add the elite wave structure. The indication for the elite wave over here. Okay. So again, we've got the first, the second, the 1, the 2, the 3, and now we should expect to see the 4th dropping down. So it's the 1, the 2, the 3. Right now we're in the 5th wave of the 3rd wave, which is a triangle. 1, 2, 3, 4, and completion of 5 waves in this specific structure. So rates should be down 1, 2, 3, 4, 5, and again we should see a breakdown and bounce back to the 81.2 level, and then we should see the uptrend continuing higher. Again, my assumption is that this Friday we will see a weaker dollar in the market as an expression of the non-farm payroll announcement. It's a logical structure over here because of the triangle that we've received here at the top, and that's my guideline for the trades that I'll decide to take. At the moment, let's see who's strong and who's weak in the market. Okay, so we can say that the Japanese yen itself is not the strongest currency or the weakest currency. The Canadian dollar, the Australian dollar, and the gold are expressing weakness. There's a great potential for the gold to continue its downtrend movement. Again, this is the indication of the gold in front of the Japanese yen, but it's good to express in front of the dollar as well, because the dollar is among the strongest currencies at the moment in the market. We can see a very clean structure of 1, 2, 3, 4, and expected 5th dropping down. So according to the gold, again on 15-minute chart, we can see that the close aspect of the gold is to drop down, meaning a stronger dollar in the market, maybe until the announcement itself. So a good joining, if you'd like to join this downtrend movement, a good place to do that is once we'll cross this trend line. Let's look at the gold itself. Should deliver approximately the same structure. Okay. So again, we've got a nice 1, 2, 3, 4, and 5 waves of downtrend impulse movement, then an A, a B, and a C wave. And since here we've got another 1, 2, 3, 4, 5, that means that that is the 1st, the 2nd, the 3rd, the 4th, and the 5th is expected to drop down. So we've got a bit of confusion over here, because downtrend on the gold should imply that the dollar is expected to gain strength, not to lose strength, according to the assumption regarding based on the dollar index. So we've got a bit of confusion. Let's place the dollar index on top of the gold. And look at a larger time frame. Okay, we can see again the triangle that we've received over here, which is basically the corrective pattern that we've received over here. While the dollar averagely found itself in a consolidation area of a triangle, the gold lost a lot of strength. Significantly, way more than the average strength or weakness of the dollar in the markets. Therefore, we can make an assessment regarding the gold that this downtrend movement is not a new impulse movement down, but a continuance of this corrective pattern. And the assessment for a downtrend movement on the gold is not as strong as the assessment of downtrend movement on behalf of the dollar index. So I still see a bit of downtrend on the gold, but not significantly. I expect the gold to stay around this level, bounce backward and forward, maybe for a higher rate over here. Still, the gold itself is pretty weak in the market, while the dollar is showing a potential to lose strength. Therefore, I'm not expecting the weakness on behalf of the dollar index to express a lot of uptrend movement on the gold itself. Again, because the dollar is expected to lose strength in the market, and usually weaker dollar in the market is expressing uptrend movement on the gold, but still the gold itself as a metal is not as strong as expected. So even though the dollar is expected to lose strength, I'm expecting the gold not to lose significant strength, meaning not to gain significant strength in front of the weakness of the dollar, sorry. I hope that I haven't confused you. The bottom line is that weakness on behalf of the dollar won't express long and strong movement on the gold because the gold itself is weak, and that won't allow the gold to express long liquidized movement in front of the weakness of the dollar. So I wouldn't trade the gold at the moment, although on a larger time frame it seems like we've received an impulse movement of an uptrend and a corrective pattern of a downtrend. At the moment there's a lot of confusion regarding the gold, so I would stay away from the gold. And let's look at other charts. We may find other good potential trades. So we can see that the pound itself at the moment is losing a lot of strength as we speak. It seems like we've received several announcements regarding the pound. Let's see that. Manufacturing PMI just received this indication. It seems like a bad indication. Let's see what was the result. Yeah, 55.4 instead of 57.2. Large and strong weakness on behalf of the pound. Let's go back to the charts. Yeah, very nicely. Pound is losing strength in front of the Swiss franc. Let's look at an example. It's very nice to see that live. So, as I said, the pound, the euro, the Swiss franc, the dollar, and the New Zealand were the strongest currencies in the market. At the moment, the pound joined the weaker group, and we can try to express the pound in front of the New Zealand, dollar, Swiss franc, and euro. If we'll open the euro versus the pound, for example, we'll see the liquidized movement because we're involving strong currency in front of a weakening currency at the moment. If we'll see the dollar versus the pound, then we can see the strong liquidized movement as well, again because the dollar is strong and it allows, let's say that the pound expressing weakness is allowing the dollar to gain a lot of strength in front of it. It's expressing its weakness in that liquidized movement. The New Zealand is, again, let's see if we've got the pound versus the New Zealand over here. Let's open that one because it will show us that correlation itself. Again, liquidized, strong movement, and again it happened after this corrective pattern, very liquidized movement as I'm expecting to see on the dollar index. Let's see if that expressed anything on the dollar index itself. Maybe it added to the strength of the dollar. No, it doesn't really. It's not really moving the dollar itself. The dollar is not gaining significant strength in front of other assets, just in front of the pound because of the weakness of the pound. So we can't really say that the average strength of the dollar was changed according to this announcement. So what I'm going to do a bit before the announcement, I'm going to organize two groups. I'm going to organize a weak group and a strong group, and I'm going to try to use the dollar's strength or weakness so that I'll be able to use the expression of the dollar in front of different assets. Let me explain exactly what I'm doing with the non-farm payroll announcement. So if I've got a stronger dollar in the market or a weaker dollar in the market, it doesn't really matter, because before the announcement I'm going to analyze the market and I'm going to see exactly who's strong and who's weak at that time. Let me give you an example. Let's say that we've got three assets. First is the US dollar. That's the asset that we've got that will deliver the announcement, meaning that the dollar itself is the one that will deliver the liquidity to the market. On the other hand, let's say that at the moment when the dollar is giving us the announcement, I've analyzed the market and I came to realize that, just for the example, the euro is the strongest currency. That's something that I can analyze, who's strong and who's weak at that time. And let's say that, just for the example, the Canadian dollar is the weakest currency in the market at that specific time. So if I'm taking the euro, again, this is when the dollar is giving us bad indication, meaning a weakness on behalf of the dollar, and that's when the dollar is gaining strength. Okay, let's say that we've received, let's analyze both opportunities. So if we're analyzing the euro in front of the US dollar, and again I'm repeating the same idea, the euro is strong over here. Okay, the euro is the strongest currency and the dollar over here is giving us weakness. So over here we will receive uptrend movement because the euro is strong and the weakness of the dollar is allowing the euro to gain a lot of strength in front of it. On the other hand, if I receive good announcement on the dollar, then expressing strength of the dollar in front of a strong euro will deliver maybe a bit of a downtrend, but generally it will deliver a fluctuation level because it's involving two strong currencies at the same time. On the other hand, let's say that we're taking the dollar and expressing that in front of the Canadian dollar, which previously, before the announcement, we've analyzed the Canadian condition and we came to realize that the Canadian dollar is the weakest currency in the market. So again, the US dollar versus the Canadian dollar, and again US dollar versus the Canadian dollar. If the dollar itself is expressing weakness, meaning bad announcement, then in front of the Canadian dollar it will fluctuate again because both of them are weak. The dollar is expressing weakness and again the Canadian dollar itself is weak. So both of them together will express fluctuation level and not significantly moving toward a specific direction. On the other hand, if the dollar is gaining strength and the Canadian dollar is weak, then we will see an uptrend. Stronger dollar in front of the Canadian dollar, therefore it will have a liquidized uptrend movement and we will have a great opportunity to trade on that asset. But the truth is that once the dollar is expressing some sort of an announcement, you shouldn't trade the dollar itself, because trading the dollar is getting involved with a lot of confusion in the market. Now let's add another tab to this specific situation. This tab is the condition of the euro in front of the Canadian dollar. In front of the Canadian dollar. So once the dollar is losing strength in the market, we can see that the euro is gaining strength in front of the dollar, while the Canadian dollar is expressing a fluctuation level in front of the dollar. This condition is delivering an additional strength of the euro in front of the Canadian dollar. And why am I saying that? Because we should look at the world of currencies: euro, US dollar, Japanese yen, Canadian dollar, pound, Swiss franc, everything. It's like a group of movements in the market. Okay, it is the market. When something is moving from one end to another, let's say that the Swiss franc is getting weaker in front of the dollar, so the dollar is getting strength in front of other assets as well, and the Canadian dollar is getting strength in front of the Swiss franc as well, and everything is moving around. Everything is affected by the same movement. Therefore, when we've got an announcement on the dollar, it delivers liquidity to the market. And therefore, when the euro is gaining strength in front of the dollar, because the dollar expressed weakness, and the Canadian dollar did not express any movement in front of the dollar because the Canadian dollar is weak, then the euro versus the Canadian dollar will deliver an uptrend movement. Because again, the euro generally, averagely, in the market is gaining strength in front of the Canadian dollar, which is weak. Let's analyze the other situation where the dollar is gaining strength. When the dollar is gaining strength, so we can see that in front of the euro, because it's strong, we've received a fluctuation level. Nothing really important is happening in the market because we're involving two strong currencies. When the dollar is gaining strength in the market and the Canadian dollar is weak, then we can see that the Canadian dollar is losing strength in front of the US dollar. And again, we've received the same indication. The Canadian dollar, being the weak currency, is losing strength in front of the dollar because the dollar is gaining strength. That is the expression of a stronger dollar in the market. And this difference between the fluctuation level of the euro in front of the dollar and the liquidized uptrend movement in front of the Canadian dollar delivers another uptrend potential on the euro versus the Canadian dollar. So regardless of a stronger dollar or a weaker dollar, we can use the liquidity added to the market to express trend on the euro versus the Canadian dollar. That's basically the only way to trade an announcement such as the non-farm payroll, because the bottom line is that non-farm payroll is very difficult to use in terms of liquidity. Once the dollar is gaining strength or losing strength, it may deliver a lot of expressions on a variety of charts regarding the dollar specifically, but once we're using the strength and liquidity of the dollar on other assets, then we can basically take a very confident and calm position without really relying on the dollar specifically, just the liquidity added to the market on behalf of the dollar. So that's the potential. The only thing that you need to do is to analyze the market before the announcement, specifically which currency is strong and which is weak, and then express them in front of each other. Again, the only question that you need to ask yourself is whether they involve the announcement itself. And again, let's go to the announcement. So we can see that today specifically at 1:30 we've got the non-farm payroll, the unemployment rate, and beside that we've got no announcement on other assets. Okay, so if for example if I'll take the current circumstance, we know that the pound is the weakest currency because it received bad announcement regarding the PMI. Then it's a very weak currency. If we will receive good announcement on the dollar, we'll express the strength of the dollar in front of the pound, just for the example. But that's the only way that I found confident enough to trade the non-farm payroll announcement. I wish you all the best with your trades. Have a pleasant day, and bye-bye.